Hello and welcome to this new video. It's DC Capital. This is episode 5 of the weekly review and the market outlook series, and we jump right into the weekly review of last week's trading. Okay, we are starting with the weekly profile of the NASDAQ100. This is a 15-minute chart, and we can see here that the price is trading lower during the start of the week, and the red lines are delineating the New York midnight opening price. And we can see if we expect price to be bearish for that day, and or if we have a bearish bias, then we want to see price trading above midnight opening price, taking out buy side liquidity or buy stops, and then trading lower for the whole day. And this here on Monday is the high probability short setup. Why is that high probability? Because price is first trading lower, taking out sell stops. Sell stops become market orders. They are short now. The stop loss is placed above this short-term high here. The institutions, the banks, knowing that, and they send price higher to take out the stop losses from the sellers. They don't want the sellers to be profitable on this move lower, so they're taking them out here. And for the bank to be short, there needs to be a buyer, and buy stops are placed above this short-term high here. Breakout traders are long, and retail traders are seeing this move as a bullish move, and they expect continuation of this. But this is just a turtle soup stop rate, so the bank or the institutions are counterparty to that, and they are shorting while retail is buying. So the bank is efficiently delivered price to the retail minded people to buy. Retail is buying this, the bank is shorting this, price is trading lower for the whole day, and is finishing this day with this down close candle on the daily chart. This is simply the market efficiency paradigm. Just keep that in mind. It's really important in your trading. It's really important for institutional concepts. And okay, this is Tuesday's trading here. C day, price is trading lower, trading higher, taking out the buy side liquidity here, displacement lower, and finally seeking the sell side liquidity below this short-term low here, and is closing the day with this, let's say, kind of doji candle. An indecisive candle is typically seen before a big news event on the next day, and this leads us to Wednesday trading. We know we have high impact news, we have CPI, prices dropping really aggressively lower, creating this order block here, and closing this week with this down close candle. Thursday we can see minor judo swing, but not taking out the buy side liquidity here, trading lower, not taking out sell side liquidity as well. But then bullish market structure shift, trading lower, and trading and finishing this day with an upper close candle. And on Friday, last trading day of the week, we can see that here as well. Price leaves relative equal highs, seeks liquidity here with this move lower, pairing up orders. The bank wants to buy when prices are going down. Also, price is redelivering this fair value gap here, and price is closing this completely. And after that, orders are paired up, and price is trading higher into buy side liquidity. This is Monday's trading, first trading day of the week. It's the 5-minute chart for the NASDAQ100, and we can see here that price is trading lower, taking out sell stops. Sell orders are market orders, so retail is short. After that, price is trading higher, raiding the stops from the early sellers. Retail is long now, breakout traders are long, buyers are placing their stop loss below here. And the bank is counterparty to that, so the bank is short. Price is trading aggressively lower. There are big fair value gaps in here. There's this higher fair value gap here and this lower fair value gap in here. Notice that this fair value gap is really big and there are multiple possible entries, but we determine the premium and discount array drawing the Fibonacci from the most recent high prior to the move down to the low of that move. And we can see here the equilibrium price point, the 50%, and we want to sell once price is above this 50% point. And also look to the left, we have a breaker block. We extend that to the right and we can see here that the algorithm is efficiently working here, respecting this breaker block, and from there trades lower, building relative equal lows here and here, seeking sell side liquidity, and is closing this day with a down close candle. We are in the New York index afternoon session, we're in the PM session, and this makes the trade high probability as well because we are blending time and price together. This is Tuesday's trading, as well a 5-minute chart for the NASDAQ100, and here I want to talk about why I see not a high probability in this trading setup. Of course it looks really good, price is taking out buy side liquidity here, and it is pairing up orders to sell into the rally. We can see that here, displacement lower, bearish market structure shift here. I picked this fair value gap because this is the only fair value gap on the 5-minute chart that is in the premium market, and this fair value gap here has no interest for me because this is in a discount market, and if I would look for shorts, I would only look for shorts in a premium market to target a discount market. So why is this trading setup for me not high probability? It's really simple, because time of day is not in line. This fair value gap has been redelivered at 1 p.m. after lunchtime, and I'm starting my New York index afternoon or PM session at 1:30. So this is not in my time of day, and that's the reason why I'm not trading this. Of course this trade looks beautiful. We have relative equal highs here made during New York lunch. We are attacking those, attacking the buy stops, redelivering price into this fair value gap here. Price is trading lower from that and seeks sell side liquidity here and here. Price is really efficiently working for the institutional minded trader. But I have to stick to my trading plan, I have to stick to my rules, and that's the reason why I'm not taking this setup. This is Wednesday trading, the 2-minute chart for the NASDAQ100. It's CPI day, high impact news event at 8:30 in the morning, New York local time. And we can see here that price is aggressively repricing lower, displacement lower, and price has been only offered to the sell side here. So I'm expecting price to redeliver buy side. Price is doing that efficiently. Price is trading higher and closing this fair value gap completely, and also price is trading into this bearish order block here. We can extend this line to the right, and here price is respecting this 2-minute bearish order block prior to CPI. Also we're taking out buy side liquidity, relative equal highs, and this sets up my high probability trade for the New York afternoon session on this Wednesday. Prior to the afternoon session there was a bearish market structure shift after taking out buy side liquidity, after redelivering price to the buy side and closing this fair value gap. Price is trading lower, creates this beautiful fair value gap here, and also there's this order block. Price is respecting this order block, and my entry was on this candle in the afternoon session. So time of day is in line with my trade, and also I'm targeting sell side liquidity. Price is staying in this fair value gap for 12 minutes and then rapidly trades lower, seeking sell side liquidity here, and finally price is trading into the negative 62 extension for the Fibonacci, but I will show you this in the next slide. As I mentioned earlier, here you can see the Fibonacci drawn from the high to the low to determine a take profit, and this was my full take profit on this trade. -62 profit extension in a discount market, taking price from a premium into a discount array. Let's dive right into first day's trading. This is a 2-minute chart for the NASDAQ100, and for the whole entire day we are traded lower. Midnight opening price is higher than here, so you don't see it on the chart, but we are trading lower than the midnight opening price, and price is taking out sell side liquidity here, and we are working at the extreme end of the range, and this is where high probability trading is. Also, we are here in the New York Index AM session, and ask yourself, where is price coming from and which liquidity pool did price most recently raided. Price is coming from here and trading lower. Price was seeking sell side liquidity, and price raided most recently the pool of sell stops. So what we can expect now is price trading higher, seeking buy side liquidity. We have this level here and this level here. Notice I'm not taking the wicks. I'm really conservative here because in the wicks there's the most volume, and this is where my first partials and as well my full profit is taken. On this candle we have this bullish market structure shift, short-term high being broken to the upside on this move higher. We have created this 2-minute bullish order block and this fair value gap in here, and as well we are in a short-term discount market and optimal trade entry for longs. The entry is in the fair value gap here, and we can see that price is respecting this bullish order block, and this is an early indication that a buy model is kicking in and the algorithm is seeking buy side liquidity. So if the algorithm is bullish, we want to see that the highs are taking out and the down close candles are getting respected. We can see that here as well. We are trading higher, taking out this high, and we are respecting the mean threshold of this bullish order block absolutely perfectly. Again, we are taking out this high on this move higher and respecting this bullish order block as well here. Targeting buy side liquidity, taking my first partial here on this up move here. Trading my stop loss, of course, really aggressively below this short-term low, because if this short-term low gets broken, this is a bearish market structure shift and maybe we can see continuation lower. So I'm taking my stop loss to here. I already secured money because my entry is here and my stop loss is here. But you can see that price is never coming down and it's trading higher and higher and higher to finally seek the buy side liquidity at those relative equal highs. And this is where my full possession is being covered. And yeah, this is the trade of Thursday in the New York Index morning session. This is Friday, the last trading day of the week, and we are here in the New York Index morning session. We can see prior to that we're taking out sell side liquidity, pairing up orders, and the whole day we are trading below midnight opening price, New York local time. And also we have relative equal highs here and the pool of buy side liquidity here. But on this Friday there was no trading made because we can see here that price is redelivered to the downside, mitigating this fair value gap, finally rebalanced it and trades higher. But for me this is not high probability because market is at a short-term premium. I'm only interested for this particular setup if price is trading lower into a discount market and mitigated this inefficiency here, and from there seeking buy side liquidity. but obviously price did not trade lower. It stayed above midnight opening price, and I'm sticking to my rules, I'm sticking to my trading plan. I know when to avoid trading. I know exactly when the probability is decreasing, and this is why I'm not taking the setup. In conclusion, this week was a really successful trading week for me personally, and I was not looking really for entering another position on this Friday. Day trading is not everyday trading. Sometimes less trading is better. Don't overtrade. Be really picky about the setups. And yeah, this concludes the weekly review. And let's jump right into the market outlook and look where price is likely drawn to in the upcoming trading week. Okay, this is the daily chart for the NASDAQ100. We can see that price is trading lower into this level of fair value gap in here. Price is re-delivering this gap with sell side liquidity, and once this gap is delivered with buy side liquidity, it's finally rebalanced, and this is what we can see here. Price is trading higher from that, and my next drawn liquidity is this pool of buy side liquidity here, this pool of buy stops with those relative equal highs. And also you can see that price is at the optimal trade entry here, from this swing low to this swing high, rejecting it really nicely. And I'm expecting price to trade higher from here to seek buy side liquidity. Let's talk about real quick about the intermarket relationships between the US dollar and the NASDAQ 100. They are negatively correlated, so if the US dollar is trading higher, we expect the NASDAQ to drop. And this gray line here is indicating buy side liquidity at the weekly bodies of the candles, because at the bodies of the candles there's the most volume, and we can see that price is trading through that, pairing up orders, seeking buy stops, and from there rejecting, trading lower, and finishing this week with this weekly candle for the US dollar. Also here we can see that price created this weekly fair value gap, and the US dollar could easily trade into that to mitigate this inefficiency. Let's jump right into the daily chart for the US dollar index. We can see here the buy side liquidity denoted with the gray line as well. We can see that price is trading through it and rejects it, and the red lines are indicating the weekly fair value gap. The dollar traded through it, rejects it, trades higher to seek buy side liquidity, and from there it's retracing lower, and we can expect the dollar to easily run higher. But for now I think it's time for a minor retracement lower, and for the NASDAQ to seek the buy side liquidity at those relative equal highs. But as I mentioned earlier, in those unpredictable market environments where we are at right now, it's really hard to predict the market for the following week. And I'm looking at price from a day-to-day perspective. I'm looking where the drawn liquidity is intraday. I'm looking where price is coming from and where the next logical level is for price to draw to. And yeah, but always be patient, don't try to force anything, wait for your setups, stick to your trading plan, don't overtrade. Really hard environments right now, patience right now is really the key to success. And yeah, with this I will finish this video here. I wish you all the best in your trading. I wish you a successful upcoming trading week. I hope you enjoyed the video. Don't forget to subscribe and like to the channel. And with this, I'm out. It's DC Capital.